Hi crypto peeps, hope you're doing well. Today's date is 22nd of November 2023. And as we look here, Bitcoin is trading at around about 36,630, sometimes nudging 37,000. So holding in strong out there right now, kind of waiting to see what happens with the ETFs, which should come within the next 29, 30 or so days. So maybe just nudging into the new year next year in 2024, which should be a great year for Bitcoin with the ETFs coming online and most probably a great increase with the halving event that comes along in April as well. So a big year next year, and with lots of other stuff happening as well. We have the US presidential elections, we have elections here in the UK, a couple of wars going on as well. So yeah, very interesting times, very interesting movements going to happen in the markets. So with this, let's get straight to the news this week we have for you, shall we? Okay, so my first piece of news here is on CoinDesk, and it's Cathy Wood speculates that Gary Gensler's political ambitions are affecting spot Bitcoin ETF judgments. So might Gary Gensler's political ambitions be standing in the way of a spot Bitcoin ETF approval? Given how knowledgeable US Securities and Exchange Commission Chair Gary Gensler is about Bitcoin, it's hard to come up with a logical reason for his standing in the way of a spot ETF, said ARK Invest CEO Cathy Wood in a CNBC appearance. She goes on to say here, this is a decentralized, transparent network. You can follow all the activity and it's highly unlikely to be manipulated. She also said, and Gary Gensler knows this, having taught a course in crypto and blockchain at the Massachusetts Institute of Technology, or MIT, prior to being SEC chair. Riffing then on what the explanation might be for the SEC's continued rejections of spot Bitcoin ETF applications, Wood referred to speculation surrounding Gensler's desire to be Treasury Secretary. And what does the Treasury Secretary do? It's very focused on the dollar, she said. There's some details about it there again, and there's some more details down below. As with all the news bites we're reading here today, it's just bites of information. Check out the links below for the full news stories to make up your own mind in full. With this, let's move to the next piece of news I have here for you today. And this is on Kitco. Massive money printing is coming in 2024. The Fed to catastrophically break something, says Preston Pysh. There's an interview about it there, so watch that one. It's on YouTube as well, so that's easy to get to. But Preston Pysh, co-founder of the Investors Podcast Network, warns that the Federal Reserve could surprise markets next year with massive money printing during an election year. With just over 1 month left of the year, Wall Street is very much divided over the likelihood of a recession and the Federal Reserve's reaction to it. On the one hand, Goldman Sachs is relatively optimistic, pricing in a 15% chance of contraction in the US economy next year, citing the exogenous shock. According to Goldman Sachs chief economist Jan Hatzius, at the same time the bank sees the first rate cut only in the fourth quarter of 2024. On the other hand, banks like UBS and Morgan Stanley call for a recession in 2024, followed by rate cuts as early as the first half of the year. UBS is not ruling out a rate cut as early as March, with cuts amounting to 275 basis points next year. And UBS chief strategist Banhuj Wajay told Bloomberg in November, according to Push, the 2024 outcome highly depends on the Federal Reserve's response to all this. He goes on to say here, the thing few acknowledge is that we're not necessarily operating in a free and open market. He then goes on to say, and depending on the speed and size of the response from central banks, you can get interesting things that can happen. Do they show up because it's an election year with so much dry powder of monetary units? Pysh anticipates a scenario where the Fed is forced to implement a significant rate cut, potentially starting in 2024. He goes on to say here, considering it's an election year, the speed of the response is going to be much faster and much swifter, with a lot more magnitude of fiat printing than what you could get in a non-election year. He also goes on to say here, they're just going to really break something catastrophically because of so much manipulation that's taken place. There's more there if you want to read that one and get his viewpoints and see what you think of that. Interesting. We shall see what happens. As I said earlier in my intro to this, it's going to be a very busy year next year. Lots happening, just globally, but also financially. Moving on the fin boat here, my next piece of paper-based news. Bitcoin is set for a parabolic rally in a matter of weeks as the halving phase begins. Bitcoin has recently struggled to surpass $38,000 mark, but maintains a comfortable position above the $35,000 support zone as the market awaits the next significant move. The prevailing consensus among most market participants is that Bitcoin is poised for a rally towards a new all-time high. The optimism is fueled by developments surrounding a potential spot exchange traded fund, or ETF, and the approval this and next year's halving event. In this case, in a November 17 TradingView post, prominent crypto analyst Trading Shot highlighted that Bitcoin is potentially gearing up for a parabolic rally in a matter of weeks, as the digital asset enters a pre- and post-halving phase of its market cycle. In the analysis, Trading Shot compared the current market cycle to the 2018 to 21 and the 2014 to 2017 cycles, where a nuanced understanding of Bitcoin's phases emerged. And it's got some charts there for you to look at on that one. They go on to say here, the present analysis places Bitcoin in the pre- and post-halving phase, with the fourth halving event expected to occur in April 2024. Currently, Bitcoin is positioned at the 0.786 Fibonacci level, set at $50,000, according to the Trading Shot model. The cryptocurrency is expected to reach this level imminently or within 3 to 4 months following the upcoming halving event. Then they go on to say here, once the 0.786 Fib breaks, Bitcoin should test the $69,000 mark, which is its all-time high, in a matter of weeks, which will be the start of the parabolic rally phase. Beyond that, it's a matter of how high the current cycle can extend in pricing to the next all-time high. Expecting big things then, to have a look at that. And their final comment here, with increasing adoption, the analysis suggests a realistic projection of no more than 1.382 Fibonacci extension. And this is equivalent to slightly over $120,000. A more conservative estimate places a potential worst case scenario at $100,000. So that would be, the all-time high there, between $100,000 and $120,000. Bearing in mind the previous all-time high for Bitcoin, going back a few years, was at $69,000. So maybe almost doubling the all-time high. Interesting news. If you're interested in all that, as I said, all the stats, all the information's down below there. Check that out if that interests you. Make up an informed decision. My next piece of news here is on Cryptopolitan. CZ pleads guilty to criminal charges and resigns as Binance CEO. This has happened in the last few hours, so this has really impacted the markets a little bit. We're going to have to see how this one shakes out. Personally, I think that there's some very interesting news coming out and some very interesting articles. One of them in the videos that follows this that kind of says that maybe BlackRock and a few of the other market leaders out there are manipulating things to happen in a certain way that they want it to go. So we'll see what happens here. But Changpeng Zhao, better known as CZ, has stepped down from his role as CEO of Binance. And this is the largest global cryptocurrency exchange. This move comes amid a swirling storm of legal woes as CZ faces criminal charges in a case brought by the US Justice Department. CZ's departure, while shocking, didn't exactly come out of the blue. Rumors and reports have been circling like sharks in the water, hinting at a potential exit. The charges, a cocktail of violations including anti-money laundering breaches. Meanwhile, the Securities and Exchange Commission, SEC, seems to be watching from the sidelines, not directly involved in this settlement saga. The plot thickens when we dive into the details of the accusations. Picture this, the SEC slapping Binance and CZ with charges for operating an unregistered exchange, stirring the pot with allegations of misleading investors. They didn't stop there, throwing in accusations involving a Switzerland-based fund, Sigma Chain, allegedly used to artificially pump up trading volumes on Binance's US platform. It's a story of alleged deception and evasion that sounds like it's straight out of a Hollywood script. And to be honest, it may just be that. As I said, lots of manipulation going on, lots of key players. As we know, we've discussed it over the previous weeks, We're discussing it today. Big players like BlackRock, Vanguard, all the top institutions in the world now getting in on crypto. And at the same time, we're seeing some of the people that have been dominating the sphere to this date being overturned and kicked out. So keep that in mind in your negotiations, your thoughts, and everything you're doing with your research on all this. Moving on to my next paper-based piece of news here. This is on the Bitcoinist. 30,000 Bitcoin leave exchanges, and is this the exodus that kickstarts a Bitcoin bull run? The recent surge in the Bitcoin price was preceded by a significant amount of Bitcoin leaving centralized exchanges. This was over the past week, and investors took to exchanges to remove Bitcoin holding, supposedly for safekeeping in private wallets. On October 18th, crypto analyst Annie Charts revealed that more than 30,000 Bitcoin had left exchanges. The data encompassed a period of 5 days, which showed massive withdrawals from crypto investors from these centralized exchanges. The chart shared by the analysts shows the accumulation had started earlier in the week and continued until the rally began. The accumulation eventually saw a total of 33,000 Bitcoin, worth approximately $925 million, move to private wallets. So keep that in mind. There's big moves happening out there. Personally, I think that's probably some of the larger institutions that are definitely going to get their ETFs acquiring in the background because they need the Bitcoin to support their ETFs. Whether that can be proved or not, I don't know, but that's my thoughts on what's happening here with this. My final piece of paper-based news here is institutional capitulation marks new era for crypto investment. One of the most significant shifts in the digital asset era has been the increasing interest from major financial institutions looking to offer a spot Bitcoin exchange-traded fund, or an ETF. This change is particularly stark and intriguing because of the previously held reservations by some of these behemoths, many of whom referred to Bitcoin and other digital assets as being fraudulent. For instance, BlackRock's CEO has gone from referring from Bitcoin as a Ponzi scheme to indicating that he believes crypto will play a transformational role in financial markets. Speaking with Nelson, Chris Barnes, a trustee of Telos blockchain, believes this change isn't arbitrary. The market and consumers are increasingly vocal about their support for Bitcoin, and institutions are finally tuning in. Barnes noted BlackRock's eagerness to capitalize on the first mover advantage, citing the success of ProShares, which managed to secure a significant chunk of assets and trading volume with its own crypto-based financial product. Barnes has been part of the Bitcoin community since 2013, and he's always anticipated the involvement of major players. Drawing parallels with the early days of the internet, he emphasized that the blockchain's technology potential isn't limited to just digital currency, and he predicts that blockchains like the internet will seamlessly integrate into our daily lives, revolutionizing sectors beyond finance. However, with major players comes the fear of centralization, and Nelson voiced concerns about these institutions potentially manipulating the decentralized essence of cryptocurrencies. Barnes concluded with a note of positivity, underlining the favorable impact of ETFs backed by Bitcoin on the digital assets spot price. He highlighted BlackRock's recent collaboration with Coinbase, suggesting a direct association of actual Bitcoin with the ETF. And this move, he believes, will benefit Bitcoin's price in the long run. So interesting thoughts and data there. Lots of people can see that the institutions coming into the market, they're going to impact Bitcoin in a big way. And this may just be the moves that many of us, especially us on Future Forecasting Group, previously CryptoViewing, have been discussing for the past 5 years, that adoption is well on the way, and this will be a massive move of global adoption for cryptocurrencies. So with this, we have some video-based news. My first piece of video-based news that you should have a look at is one that I subscribe to. Great content. This is just general information here. So this is from Coin Bureau. This is the crypto news, Bitcoin price, ETH versus SOL, ETF delay, OpenAI, and lots more. Lots of general news in there. Going through it in detail, 21 minutes. Well worth a watch. My next one here that I have here today is Altcoin Daily. Another favorite of mine, put out content as their title suggests every single day. This one goes on for 9 minutes. Did BlackRock take down Binance, and what comes next? Very interesting. I do think that BlackRock have a massive input to play in this, being one of the biggest financial institutions in the world. You have a look, see what you think on this. I think it's very intriguing, very good data. My final video here today is on Savvy Finance. I like these as well. Keep these in mind when you're subscribing. This goes on for 14 minutes. And it says super bullish on Bitcoin, huge ETF surge in January coming, and this comes from Gareth Solway, and they talk about the shocking Binance and SEC news and lots of other stuff as well. So lots of general information there. So that's it with the news this week. I hope you enjoyed what we talked about. As I said, the links are down below for you to check out this content in full for yourself. Please click that button, let us know any comments, subscribe, help us out. Check out our website, our future forecasting group. And that's it for this week. Things are getting busy out there. It's looking good. Everything seems to be going in the right direction. But be safe out there. Be safe with your money. Be safe with your research. Take care out there. Have a great week ahead. See you next week. Namaste.